Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Tuesday, November 24th. Good day from Australia. And also I want to send greetings and happy birthday wishes to Norm. Now, let's get started. We were looking for, as we talked about last Friday, I felt that Monday would be a positive day for us. This was not a bearish setup on Friday, and what we were looking for is that push back up. Well, we can see here in the NASDAQ market, it did move back up above that buy point we had here, and it has not reached magnitude objective, but at least it's a step in the right direction. And we're seeing that across the board. These buyers came back into these markets. Even in the mid caps, they got stronger, but they weren't able to hold on to it. And this market did reach magnitude objective. It would have also closed out that sell from this sell point to that buy point. That difference, by the way, would be 3 points or $300. That's the dollar value of that move. It gave us a nice push to the upside, reached magnitude objective, and it would also created to sell as it back down. But right now we're looking for another push back up in that market. Now, let's continue on here. So, with this kind of action happening here in the stock indices, what should we look for in the currencies? You know, again, the euro was right down at these levels that we found buyers before. We were looking for follow through here to the upside. The euro did give us that action. You can see in Asia, actually in the time zone I'm in right now, that this market did back off. So two things happened here. It would have reached magnitude objective, came back to a scratch, would have initiated a short, that failed, and right now a long position will be in that market. Same thing for the Swissy. And our friend Mr. Yen, looks like it's firming up here a bit. Again, it's at a magic level. We got to move. We'll see how this finishes here. We need a close above that 1250 range. And so it's in a very critical phase, I think, in that market. The Aussie dollar, as fast as it came back up, now when it did, would have closed out that short position. And in that market, that would have been, let's see, what we had, 70 ticks right here. And the dollar value of that would be $700 a contract. It also reached magnitude objective, scratched as it came back through that range, and right now there would be no position in that market. Interesting, huh? And the same thing for British pounds. We have kind of a day that pushed right back up there. That would have closed out that short position from that level. That would be the concept anyways. That would be 80 ticks, or in this market, $500 per contract would be the dollar value of that move. Now the buy, though, this push that you see here did not reach magnitude objective, and right now this would have created a losing trade, and it's in a no zone right now. In other words, nothing's going on in this range. Canadian dollar also came right back through that buy point. And the Canadian dollar, that was 60 ticks. That was the difference, or $600. The real big deal is, can we get follow through? So this market would have reached magnitude objective. It would have come back and given us a scratch. And what we need to see here is some follow through back here to the upside. All right. And today, can we get that? I'm not so sure about that. Let's talk about the action that we'd expect to see here. And it's basically an unchanged type day. We're not looking for a strong move either way in these markets. The structure that we have here, typically we're looking for a rest day unless we have a fundamental reason for these guys to get up and get going. When it comes to the interest rate markets, short end of the curve continues its move that we've seen in the past. The notes actually came down, went through that sell point, and the difference between this buy point and that sell point in the notes is 28 ticks, or $875 a contract. Also would have initiated a short position. That position failed with 5 points of risk, and we're looking for a push here to the upside. But to really get back into this on the long side, I think we need a push beyond that 120 level. And then the bonds, well, it came close, but did not take out that stop, and we're still looking at a market that's struggling at these higher prices. You know, today could be kind of a critical day here for the interest rates. These have potential for giving us that push back towards these previous highs. In the metals markets, well, in gold, we've seen that market continuing its push here to the upside. This sell point's also been tightened up a bit. We are looking for some follow through in that market. Silver, on the other hand, it just cannot seem to hold on to. We made new highs on selling. And these containment shadows that we talked about before that can set up a sideways market right now in that market, that looks like the behavior that we're looking for to continue. Silver's got to get up and get going. If buyers are really here today when it took out that high, that should have been a screamer. Copper also reached a magnitude objective on that buy point, and it also would have been a scratch as it came back. Nothing going on in this range. To buy or sell it right here in the middle of this range for that particular setup is 50-50. But if you look at the volatility that we have, if you're looking at that kind of trade, we could probably reach magnitude objective on either side, I think. At least that's the way it's behaving. Leave everything in place there. And let's take a look at the energy markets. Boy, crude oil, again, this is a market that has made profit objectives to the downside, profit objectives here to the upside. So that'd be $400 to the upside, $400 to the downside. That would be the concept. And very interesting, really a neutral stance. I just don't see anything bullish or bearish for this market here. I think it's a 50-50 type trade. Natural gas, we are making an attempt at new highs, did reach magnitude objectives, but look at the way it did it. Really sloppy inside the benchmark candle. This implies weakness in this market, not further strength. So unfortunately, we're just not seeing that get up and get go that we need here for that market. But if today can take these highs out, it should be dramatic, and we may have a potential double bottom down here. So critical phase here for natural gas. And in the grains, well, we can see that beans made new highs, but they also reached a magnitude objective. That would be a scratch, and right here there would be no position in that market. Corn, also when this market took off here to the upside, we see some selling coming in. That's what we were looking for, continuation of that selling. But it also came back and gave us a push here to the upside, and that would have initiated a long position, and it failed. Then it initiated a short position that reached magnitude objective. So an interesting setup. We are looking for kind of a small move today, not a dramatic move to the downside. And wheat also initiated a long position. That one failed. 5 cents would be the risk, and it looks like it's knocking on the door on the short side for that market. Well, this concludes today's market studies. Hope you found a few ideas helpful. Looking forward to being with you again tomorrow. And in the meantime, take care.